So we're talking about this ITC demerger, right? And it seems there was a slight hiccup, a small correction to the share acquisition cost.
Yeah, exactly. It's not about the listing price of the hotel shares itself, but a correction regarding the initial cost of accruing those shares after the demerger of the hotel business. It's like adjusting a historical record rather than affecting current market value.
Okay, that makes sense. So the initial information was a bit off, and now they've updated it like a minor bookkeeping thing.
Precisely. Initially, they said the cost of acquisition for 100 ITC hotel shares was 50,040 rupees, but it's actually 54,040 rupees. A slight but significant change for tax purposes.
Right. So it's not like the value of the shares themselves changed, but how we calculate our taxes on them, correct?
That's spot on. Think of it like buying a house and recording the price incorrectly at first. The correction doesn't change the house's market value, just your original investment record for accurate profit calculation later.
Okay, I get the analogy. So this correction has more to do with accurate historical cost for tax calculations?
Yes, it's a historical accounting figure. It's about how much shareholders effectively paid for the hotel shares after the split. And that affects capital gains taxes later. It's like making sure your initial investment is recorded accurately for tax time.
So a higher cost of acquisition actually means lower capital gains when you sell?
Exactly. A higher cost basis reduces your capital gains because, well, your profit calculation is based on the difference between the sale price and the acquisition cost. So the higher your initial cost, the lower your taxable profit, potentially reducing your capital gains tax.
That's actually good news for shareholders, right? A bit of a silver lining in this whole demerger process.
It is. It's a positive correction for shareholders because it can lower their tax liability down the line, which is like a pretty nice surprise.
So this doesn't affect the actual price of ITCHR when it starts trading. It's only for tax purposes?
Correct. The market price of ITCHL will depend on all kinds of things: investor sentiment, general market conditions, the financial performance of ITC hotels, and like how it compares to similar businesses. This correction is about shareholders' cost basis for capital gains tax only.
So things like market conditions and investor feelings towards hotels will drive the listing price?
Absolutely. Those market factors will drive the listing price of ITC hotels. So the corrected cost is like just a separate issue, strictly for tax purposes.
So investor sentiment, that's basically how positive or negative people feel about the company and the hotel industry in general.
Yeah, exactly. If investors are bullish on the hotel industry, then the listing price of ITHL shares is likely to be higher and vice versa.
And you mentioned the company's financial performance?
Right. Things like revenue, profitability, future growth potential, all of that contributes to the valuation of ITC hotels. The better they perform, the higher the valuation is likely to be.
Right. And how it stacks up against other hotel companies? That's valuation compared to peers?
Yeah, it's like how does ITGL's valuation compare with other listed hotel companies? It's an important benchmark that investors use.
Okay. And finally, economic conditions play a role as well?
Yes, the overall economy and its outlook will affect the hospitality sector and thus the valuation of IT Seychelles. So a healthy economy usually helps the hospitality sector and vice versa.
So to recap, the main thing here is that the cost of acquisition of ITC Hotels shares was corrected. It's now 54,040 rupees for 100 shares and not the previously stated 50,040 rupees.
Precisely, that adjustment is important for accurate tax reporting, helping lower the capital gains tax when you eventually sell your shares. It's like adjusting a tax record, not the current price.
And this correction doesn't change the market price of the shares themselves when they get listed?
No, that listing price is determined by market forces, things like investor sentiment, ITCHS, financial performance, and the overall economic situation.
Right. So it's crucial to understand the difference between cost of acquisition and market price.
Absolutely. They are two completely different concepts. The cost of acquisition is an accounting thing, while the market price is, well, determined by demand and supply.
So investors shouldn't worry about the corrected cost of acquisition affecting the market value.
Exactly. This correction doesn't have a direct bearing on the market price of ITCHS shares. It's primarily for tax purposes. So shareholders shareholders can accurately calculate their tax liabilities when they sell their shares in the future.
Okay, that's pretty clear now. So it was a kind of necessary but a beneficial correction for the shareholders.
Yeah, a necessary and positive correction, which could potentially reduce tax liabilities for the shareholders, which is always welcome. Disclaimer: we advise investors to check with certified experts before taking any investment decisions.
So this whole thing is like a reminder that it's important to keep your records straight.
Exactly. It's a reminder that accurate record keeping is essential, especially when dealing with investments and taxes. And small adjustments can make a big difference when it comes to tax time.
Now, before we move on, we wanted to mention that if you're enjoying our deep dives, please take a moment to like, share, and subscribe to our YouTube channel. It really helps us out.
Yeah, we really appreciate your support. Anyway, so another interesting point from the document is that, the actual demerger was effective from January 1st, 2025.
Oh, right. That means the split is official now, doesn't it? And what was the share entitlement ratio?
So it was 1 share of ITCHL for every 10 shares you had in ITC. So if you owned 100 shares of ITC, you got 10 shares of ITC Hotels.
Okay, that's good to know. So the demerger has resulted in shareholders owning two separate stocks now, ITC and ITC Hotels.
Yeah, exactly. It's like having two different companies with two separate stocks, so investors can choose their exposure to ITC and to their hotel business separately now.
And this share split doesn't actually mean you've gained or lost any money, right?
Right. It's just an accounting and operational change. You've just reallocated your investment between the parent company and the hotel business. Think of it like having one big pizza and then dividing into two smaller ones. The total amount of pizza, or in this case, your investment, hasn't changed.
Okay, so it's important that investors understand this demerger and the new share structure.
Yes, that's absolutely crucial, especially when they are making investment decisions or planning for taxes.
It's a bit complex, but I think we've covered the key aspects.
Yeah, we've broken it down, I hope. It's a good idea to stay informed and consult a tax advisor to fully understand the implications of this demerger.
So moving forward, what do you see as the next steps for both ITC and ITC Hotels?
Well, now with separate listings, they will have more flexibility, and the management of each company can focus on their specific objectives. And investors now have more choice to allocate their investments based on the performance of each of the companies.
That's interesting. So now they are free to pursue their own growth strategies, and it'll be interesting to watch their trajectory.
Yes, it's like having two different ships sailing in different directions, each with its own set of challenges and opportunities.
And I guess going forward, investors will need to keep an eye on both companies' performances independently.
Absolutely. It's essential to track both companies individually to make informed investment decisions. This demerger creates more possibilities, and it allows shareholders to reassess their investment strategy